Today's financial market update, the most important market insights you need to know. Market sentiment is mixed, mild. Market showing mixed signals. Index performance, S&P 500 at 5.5%, Dow Jones at +0.03%, NASDAQ at -1.21%, Russell 2000 at +0.53%. The stock market is currently experiencing a bullish trend, indicating strong investor confidence across sectors. The prevailing bullish sentiment suggests that investors believe in continued growth, particularly in sectors like renewable energy, indicating potential long-term gains. Consider allocating a portion of your portfolio to XWELL, given its strong performance and growth prospects in the renewable energy sector. Inflation rates remain elevated, with the Consumer Price Index (CPI) showing a year-over-year increase of 3.7% as of September 2023. The persistent inflation indicates that consumers are becoming more discerning, which may lead to prolonged challenges for discretionary spending sectors. Consider investing in companies that prioritize cost-cutting and operational efficiency, as they are more likely to thrive in an inflationary climate. IMAX reported a Q4 revenue increase of 35.1% YoY, reaching $125.2 million with adjusted at 58. IMAX and HCI Group's strong earnings suggest recovery and growth potential in their respective sectors, encouraging further investment interest. Consider increasing exposure to media and insurance stocks like IMAX and HCI Group, which are showing strong growth trajectories. Lowe's earnings rose over 10%. Surpassing expectations despite challenges in the housing market. The increase in Lowe's earnings suggests resilience in certain retail sectors, potentially indicating a recovery in consumer spending patterns. Consider investing in home improvement and retail stocks like Lowe's, which may benefit from stable demand despite economic pressures. The effective federal funds rate peaked at 4.33% in early 2025 and fell to 3.64% by January 2026. A declining federal funds rate generally signals the Fed's intent to stimulate the economy, indicating a potential rebound in consumer confidence. Consider reallocating a portion of your portfolio into growth-oriented equities that stand to benefit from increased consumer spending. U.S. GDP growth is forecasted to reach $60 trillion by year-end, driven by geopolitical easing factors. The projected GDP growth indicates a cautious recovery, suggesting that investors should prepare for potential volatility in various sectors. Consider investing in defensive stocks that tend to perform well during economic slowdowns, such as utilities and consumer staples. Gold prices are currently hovering around $1,900 per ounce, influenced by a strong U.S. dollar and investor sentiment. The stability of gold prices suggests that investors are cautious, signaling a wait-and-see approach amid economic fluctuations and a robust dollar. Consider allocating a portion of your portfolio to silver, as it may serve as a hedge against economic instability and inflationary pressures. The U.S. dollar has strengthened significantly, impacting gold prices, which remain under pressure amid this trend. The strong dollar typically diminishes gold's appeal as a safe haven asset, suggesting investors are favoring riskier investments. Consider diversifying portfolios by allocating funds to sectors that may benefit from a strong dollar, such as export-driven companies. Ukraine is enhancing its air force capabilities, reportedly receiving advanced weaponry to counteract Russian aggression. Ukraine's military enhancements may indicate a prolonged conflict, which could lead to increased defense spending and market volatility in related sectors. Consider investing in defense stocks as military spending in Ukraine and NATO nations may rise, providing growth opportunities in this sector. Targa Resources is issuing $1.5 billion in senior notes, with maturity dates set for 2029 and 2034. Targa's bond offering signals strong demand for fixed-income investments, potentially attracting institutional investors seeking stable returns amidst market volatility. Consider adding Targa Resources bonds to your portfolio for a reliable income stream, especially amid current geopolitical uncertainties. China's exports surged by 15% year-over-year in the latest quarter, reflecting strong global demand and government support. The export growth signals robust international demand, indicating potential profitability for companies involved in trade and manufacturing sectors. Consider investing in export-oriented companies that are likely to benefit from increased global demand and supportive government policies. Targa Resources has launched a $1.5 billion offering of senior notes with interest rates of 5.3% due in 2029. Targa's substantial bond issuance reflects confidence in capital markets, even amid rising volatility and uncertainty in the economic landscape. Consider investing in corporate bonds like Targa's offerings for potentially attractive yields amidst a volatile interest rate environment. A major REIT recently acquired Magnolia City Place in North Jefferson County for $25 million, indicating strong retail property interest. The acquisition of Magnolia City Place suggests that investors are still confident in retail property potential, even during economic uncertainties. Consider investing in REITs focused on retail properties, as they may benefit from sustained investor interest and potential property appreciation. Rising interest in private credit is making it a compelling option for individual investors seeking alternative investments. The surge in private credit interest suggests a shift in investor focus, potentially leading to increased competition for available capital in the private equity market. Consider diversifying your portfolio by allocating funds to private credit investments, which may offer attractive yields in the current market climate. NVIDIA's CEO recently alleviated AI fears regarding enterprise software, which positively impacted stocks like Viva and Upstart. NVIDIA's positive outlook on AI technologies suggests a recovery in software stocks, indicating a strategic shift in investor focus towards tech-enhanced solutions. Consider allocating funds to software companies like Viva and Upstart, which may benefit from the renewed confidence in AI applications. Circle Internet stocks surged following a robust fourth-quarter profitability report, signaling strong operational health. The rise in Circle's stock highlights investor confidence in digital asset companies, potentially attracting more capital into the sector. Consider increasing allocations in digital asset companies like Circle, as strong performance may indicate future growth potential. The U.S. government is probing foreign subsidies impacting solar product tariffs, affecting local manufacturers and market dynamics. The investigation into foreign subsidies signals potential changes in tariff structures, which could benefit domestic producers if adjusted favorably. Consider investing in U.S. solar companies that could benefit from favorable tariff adjustments, especially those with strong domestic production capabilities. Thank you for watching. FERPA, your financial Sherpa.